You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition. Our focus is on Teamlease Services earnings that declared its Q4 results on 22nd of May. The top line increased by 19.9% and the profit increased by 14.7% on a year-on-year basis. But compared to the previous quarter, the revenue declined by 0.5% and the profit decreased by about 11.35%. To detail for us the earnings insights and the outlook going forward from here, Ramani Dathi, the CFO of Teamlease, is now joining in. Warm welcome to you, Ramani. Thank you so much for taking the time out for this discussion. Could you first up list out for us how have you assessed the quarterly earnings and what accounted for the pressures?
Yeah. No, firstly, within general staffing business, we are seeing very good momentum in terms of overall hiring trends, and this is across all industry segments. So we are not seeing concentration with any few segments, be it FMCG, FMCD, e-commerce, telecom, retail, BFSI, across all sectors. The demand and the outlook for FY25 is very good. BFSI for last couple of quarters, there was little sluggishness, but even that is also getting corrected by end of Q1. Coming to specialized staffing is where we are seeing the headwinds. In fact, this is almost into second year now. While IT service companies are not giving the volume in terms of overall the number of new additions, to some extent we are able to maintain the revenue run rate thanks to GCC hirings, because the number of new GCCs as well as the organic growth of headcount within existing GCCs is very positive. So that will help us to maintain the base. But by mid of FY25, if the momentum can pick up with IT services, so that can really accelerate our margin expansion. HR services has turned profitable and it will continue to grow upwards of 30% into future as well.
Okay, Ramani, is it possible to break up the dependence on GCC, as in what is the contribution that GCC has versus your overall traditional IT services companies hiring, and is there any number to the GCC hiring that you can share with our viewers?
Sure. So just to compare, 2 years back, our GCC contribution to the headcount used to be about 30%, and that number has now gone to almost 50-55%. And this will continue to increase till the time there is a pickup in IT services hiring, because right now, barring the backfilling of attrition, IT services are not creating any new positions. In fact, their overall reported headcount has been consistently either flat or marginally dropping quarter on quarter. So the entire growth that we are seeing in terms of headcount for us is purely happening in terms of GCCs. And again, in the past, for us, the GCCs are largely the banking services, the BFSI sector GCCs, but now we are seeing other sectors also adding good amount of new positions.
Okay, understood. And you also mentioned about the headwinds in the IT industry, which you're talking about as well, slower hiring, lower headcounts. All of these have been the key conversations that we've also had with the top line IT companies this time around as well. You've talked about the slight setback on the BFSI space as well. Could you list out for us the key headwinds that you're talking about? How long are they going to be continuing to be a watch or a concern for you over the next few quarters?
See, again, at this stage, we don't have any kind of visibility on how long this would continue. As I mentioned, we are already past 6 quarters in terms of low hiring in IT services. And we believe by mid of this year, there should be a pickup. But again, that's more like a hope statement. At this stage, we don't have any concrete pipeline that is being built in terms of new hirings. And right now, there is still a demand for mid and senior level within IT, especially in niche skill sets, AI, ML, those kind of skill sets. There is still a high demand. But as far as the entry level jobs and 0 to 4 year experienced, we are not seeing any pickup in the momentum.
Okay. Also, do talk to us about the general staffing where you are positive. You've seen also an improvement in the revenues this time around as well. And could you also give us an idea on the realizations? What has this done? How has that piece moved in the fourth quarter, and the outlook going forward for general staffing then?
Sure. So within general staffing, in terms of volume growth, we are doing extremely well. As I called out earlier, across sectors, we don't have any concentration, and upwards of 20% growth in headcount is what we are confident even for the upcoming year as well. But where we are seeing some amount of setback is on the realizations, because one trend that's happening for the last few quarters is that the large clients are growing more rapidly than the rest of the other clients. And typically, the markups and the negotiation power with large clients is relatively on a lower side, and to some extent, that is impacting. So that's why we are focusing on adding more new clients and also the new age clients, which are into manufacturing, industrial, like specific segments like smartphone manufacturers, EVs, chip manufacturers. So these are the segments where the average realizations are higher compared to our current realizations. And we are focusing on more of these clients to add to our kitty and also grow with our account management in the coming years. And this realization pressure has also impacted the EBITDA margins in staffing to some extent. Also, the withdrawal of NEEM apprenticeship program will be completely done by Q1 of FY25. So all the impact, or I mean, close to 20 crore of profit got depleted because of withdrawal of 40,000 trainees under this program. And with that being fully getting closed by Q1, Q2 onwards, we are more confident of margin expansion on a sequential basis.
And for the full year, what could be the outlook on the margins?
On profits, we are quite confident that we can grow the profits for next year upwards of 25% and more. And as far as margin as a percentage is concerned, it's a little difficult to put down a guidance. But from Q2 onwards, anywhere between 5 to 10 basis points a quarter is what we are targeting.
And top line growth, if you could also give us an idea.
Top line growth can be anywhere between 20 to 23%, even for FY25 as well. This is largely led by the general staffing business. If we can, if the IT staffing also recovers during the year, it can be slightly better than 23%.
Okay, understood, Ramani. What about the employees that you've added to the total headcount? You added 10,000 employees this time around in in the last quarter of this fiscal. That's taken it strength to 3,19,030 odd levels. How do you see this going forward from here?
Yeah. For the full year FY24, we have added about 44,000 in general staffing business. And because of the NEEM withdrawal, we had some drop in the trainee base. But otherwise, yes, 20% volume growth is what we have posted this year. And we can do a similar growth percentage for FY25 as well. And at this stage, we are not seeing any kind of headwinds in achieving that 20% of volume growth. And in terms of general trend, in the past, we used to get maximum headcount addition from only metros and tier 1 cities. But good thing is now we are getting almost 30 to 40% of our hiring from tier 2, tier 3 places, smaller cities and towns, especially at entry level jobs with manufacturing and BFSI. So which can help us to maintain the 20% growth rate in coming years.
Okay, well, thank you so much, Ramani, for sharing all these insights for all our viewers from the quarterly earnings. All the very best to you for the upcoming quarters as well. Hoping to see you back soon on Business Today.
Thank you, Sakshi.
All right, viewers, that was Teamlease Services explaining to us really how to understand what were the key pressures in this quarter. Q2 onwards of the current fiscal year, it looks positive for the recovery as far as the general staffing continues to be more promising for the company. But it's the IT outlook that continues to be uncertain. So that is going to be continuing to be under watch list as far as the company is concerned. Many thanks for viewing this, but continue to be with us on Business Today as we will get you more exciting earnings conversations from the world of earnings that are being reported.
More than half the Lok Sabha election is over. It's the fag end of the Lok Sabha elections. And joining us today is a very special guest, Union Finance Minister Nirmala Sitharaman, who's been very difficult to pin down because she's been very busy